Yes, what's good, my people? It's your boy Daniel FX here. Welcome back to the channel. Today is like, what's it, episode 6, maybe 7? I don't know what episode we're on right now, but it's the
Yes,
Easy Effects series. Or episode 6, you said?
believe so.
All right, yeah. Well, Easy Effects, episode 6, Training for Dummies series. I know there's been a little bit of a gap between episode 5 and episode 6. We've just been mad busy, been doing a bunch of stuff. I had to give Sam a little bit of time to trade, get some data in there, get some experience, because from this point onwards, it's very much about personal one-to-one feedback and actually looking at his positions and seeing what he personally needs help with and kind of moving from that point. We're also going to be getting into a bunch of psychology, a bunch of mindset stuff, a little bit of trading motivation for you guys as well, and getting a little bit more in depth about the system and all of that good stuff. Now, if you guys are here and you've been following along with the series, you've been learning how to trade from the Easy FX series, congrats to you for actually taking action. I also want to extend an offer to you to join the free masterclass I'm hosting at the end of April. 100% for free. It's going to be the first link in the bio. It's danielfx.com. You can sign up. I'm going to be doing up to a 3-hour live webinar where I literally go through absolutely everything from ground zero, from the absolute basics, from what we covered from episode 1 up until some more advanced concepts, and kind of answering some questions live in real time. So make sure you don't miss that. It's limited spots, and I hope to see you in there towards the end of April. Nice. So let's get started, Sam. First and foremost, how's your trading been? What's been happening since we last left off?
Last left off was blowing the 10K. So yeah, in between there, I've had a 50K, which was going good, and then essentially kind of blew it. Then hopped back onto, and yeah, it's been going good. I mean, I've just been following the strategy that you've taught me, and that obviously followed my trading plan. You know, it doesn't allow me to trade every single day. So yeah, just basically following the plan, sticking to the strategy, trying to find the good setups. And yeah, to anyone at home, I recommend you do the exact same thing.
Yeah, nice one. Something you just mentioned right there that I briefly want to touch on is that the plan doesn't allow you to trade every day. And there's a reason behind that. And that's because not every day is actually meant to be a trading day. Like, the whole idea behind trading is you're trying to make money, you're trying to make profit. And not every day is going to be a profitable day. Not every day is worth you trading. So even though every day or every live trading day, you're looking at the markets, you're potentially looking for setups, you're looking for the bias, etc., not every day will result in a position taken. And that is 100% the correct way to go about it. So if you do ever go through a period where you're not trading for a week, maybe 2, 3, 4 weeks even, I've had months where I don't trade at all. That's completely fine, and that is part of the process and part of the system. Furthermore, I'm very blessed enough to work with a lot of prop firms behind the scenes, and I've seen the statistics, I've seen the numbers, and the people who make the most payouts, the people who make the most profit, the people who actually make real money, usually on average trade anywhere from 3 to 5 positions per month. So averaged out, that's roughly maybe a position a week, if that. So it really is trade less, make more. And what you're going to notice, especially in your personal trading, is that as you start to move to the bigger account sizes, you're going to naturally like slow yourself down. You're going to naturally trade less. When you're on a 10K account, when you're on a 20K account, 50K account, depending on how much money that is for you, you're probably going to be trading a little bit more aggressively. You might take a couple more positions. You might just be a little bit more aggressive in your approach, maybe even risk 1.5%, 2%, etc. And I would say that's acceptable on the smaller accounts to a certain extent. But as you start to move into like the 6-figure funding and the deep six-figure funding, you're going to start to notice that like you don't really want to trade that much, because once 1% risk starts becoming a couple $1,000s, you're going to start to be very selective about what positions you take and where you want to risk that capital, because obviously it's a lot of money. But then on the smaller accounts, if it's like a 10K and you spend $30 on it and it's not like the biggest deal in the world for you, you're going to find yourself taking more trades, taking more positions, because your psychology is at a different level. Now, what I'd recommend you do, and what I recommend a lot of beginners do, is when you're on the smaller accounts, yes, you can be aggressive. Yes, you can trade at 1.5%, 2% risk. Yes, you can kind of just be more aggressive in the approach. But I try to recommend, like, prime your mind, try to get yourself in that routine of treating the account you're trading like it's big capital. Because if you build up those habits of trading aggressively and trading literally every day on the smaller accounts, chances are it's going to carry over to the larger accounts. So you're going to find yourself essentially going into drawdown on big accounts because you just learned that from the smaller accounts. So it's a bit of a balance. You can be more aggressive. I'm not saying you have to be super conservative, but just try and keep it in mind that once you start trading bigger capital, you don't want to be doing that. You know what I'm saying?
Yeah, 100%. No, that makes sense. I think it's just like a self-awareness thing. You know what I mean? You have to analyze yourself and understand how your psychology works. And then yeah, but yeah, no, I've been doing good in terms of like following the plan. And I understand that when the days that I don't trade, it's like I've come to realize if you go to the market and you're sitting there trying to figure out a trade, like, oh, maybe if this, probably not like a good day to trade. Like usually whenever I've made a good position, I go to the market and I see a setup pretty much straight away. And then I wait for a confirmation and I'll enter. The more that you try and like make up a story, in my personal opinion and my experience, is when I've had positions that have gone. So
yeah, 100%. So you cut off a little bit towards the end of that, so hopefully the stream caught it. But I do 100% get what you're saying in terms of like usually, and this is from my like 6 years of like trading experience, is like the trades that are easy, the trades that are actually good, the ones that are high probability, you can see them immediately when you hop onto a chart. It doesn't take a lot of analysis, doesn't take you to paint a picture and find the key level and this, that, the other. Like you just see it when you come onto the chart. It's obvious, it's clearly a buy, it's clearly a sell. This is my key level, that's my entry, take the trade, 1 to 2, be hit profit. 9 times out of 10, that's how it should be. The trades that are like tricky, the trades where the market bias is kind of fumbling and there's a bit of an accumulation and prices like moving a little bit iffy, and then you still try and force it. Typically speaking, those are the trades that are going to get you emotional, and those are the trades that are probably not going to end up too well. So it's good that you touched on that and you're actually self-aware enough to clock that is the way forward, isn't it? But enough chit chat over. Let me go ahead and share my screen and let's actually review some of your trades that you've been taking over the past couple of weeks. And yeah, let's have a little look in it. Can you see my screen?
I can see your screen indeed.
Nice. All right, this is US30 from today. I was looking for a potential long breakout right here. I was waiting for a potential 5-minute change of character around this sort of zone, and then I would have taken a long continuation. The candle ended up wicking and closing below the previous body, so this is technically not a break of structure, it's not a change of character. So I didn't take the trade, and as you can see, price ended up melting, rejecting, coming back, and it just headed down for the day. So this is, and again, bit of a tangent right here, but this is why you always wait for candle closure. You always wait for the 5-minute candle to shut before you take your entry, because it's very easy to get faked out. If I went ahead and took my trade right here when the candle was the whole way up, I would have anticipated a break of structure. I would have been thinking, yo, this is going to close up here. Let me just take my trade now so I don't miss an entry. And then would have entered the trade, candle would have wick, shut below the candle. And then essentially I would have been in an invalid position because I just got a little bit too excited and I would have been stopped out very quickly. So a little key takeaway, always wait for 5-minute closure. Anyways, let's go to your journal and let's check out some trades that you've taken. We'll start on journal X, this first one. All right, so a couple of things. Furthermore, on this session, we'll actually go through a proper journaling method so we can actually get a better journal for you. Because I guess like this does work, it does serve a purpose, but in terms of really journaling and really moving forward in your trading, you want a little bit more data and a bit more like clarity in terms of what you've done and why you've done it. So you can actually move forward, but this is for the time being. All right, so
it's so funny. Sorry to interject, but it's so funny because like, you know, like I'm looking at this trade right now and I'm thinking like, what the fuck is that? Because I guess it's just like I look on these like trades from when this here, and I haven't been doing journaling up to standard, but it just shows like, not to like toot my own horn, but it's just interesting the progression of actually like understanding the charts, because yeah, from these trades now to like my trading now is like completely different. But yeah.
Yeah, 100% in it. And what you're going to notice is as you take more trades and as you spend more time in the markets, naturally you're just going to forget the positions you take. And then when you have a journal that looks like this, you're going to come back to like little sections of price action like this, and you're going to be like, yo, what the fuck did I do? What trade is this? What time frame is it? What was the higher time frame? Like, why did I take the position? And it's just not going to make any sense. And you're going to be sitting there guessing little pieces of price action where like you just don't know what happened. So that's why it's super important to keep a nice in-depth trading journal so you can actually understand everything that went into the position. But yeah, we'll go through the journaling thing in a little minute. But for the time being, I'm going to assume this is a 5-minute time frame. Looks like 5-minute price action to me. Again, I can't see what your higher time frame bias was, but I'm going to assume that you were trading in the direction of the higher time frame trend. So we'll just say that this is bullish. So you say that price rejected your key level right here. A little bit of a 5-minute depletion, essentially. You then saw a change of structure, which would be right here on the break of the previous high, or maybe the break of this new like a bit of structure right here. You waited for a confirmation. What do you mean by waited for a confirmation?
Very good question. Yeah, honestly, I don't see a confirmation there. So in all honesty, I don't know. I guess a green candle closure, but like in all honesty, like I don't see a confirmation there now. So
cool.
Yeah.
Yeah. So this is exactly what I'm talking about in it. Like you have no idea what you are talking about right here because it's
Yeah.
just a little bit of text and you're like, what is the confirmation? Like you don't know.
Yeah.
Really,
Yeah. Yeah.
like,
Yeah.
there's not enough detail here.
Mm.
So yeah, again, like I said, we're going to touch on that in a minute, but just for the time being, we'll keep it rolling with what you've got right here. So cool. You saw a little change of character. Price created a 5-minute high, a low, and then broke that high. Not quite, actually broke it on the second candle. Right here, you say entered too late, but to me, based off of what I'm seeing, that would actually be the correct entry. Because if you entered on this candle,
Yeah.
this candle is actually not a breaker structure of the previous high because the
Oh,
candle
cool.
wicked and the body shot below. So this would have actually been the entry if this was a valid trade. Not saying that it's not, but yeah, cool. So you entered. You say entered late on this candle, but then your position is still down here, which doesn't make sense because if you entered on this candle, your position should be up here rather than down here, unless you just didn't move the
Mm.
position. But side note, your stop loss is incorrect. To be honest, it should be below the low. If you're entering based off of this market structure, your
Yeah.
SL should be hidden behind the previous low, which would have been here.
Mhm.
Regardless, you would have been taken out in either case scenario based off of this wick, but the principle is still the same. Like you don't want to put your SL at the low because if price comes down and retests the low and leaves equal lows, which happens quite a lot of the time, then
Mm.
you get wicked out of the trade. Price
Mhm.
continues in your direction, and then you either end up revenge trading, which you shouldn't be doing, or you're just out of a profitable trade that should have gone in your direction, but you just cut yourself short. So don't be doing that. Definitely give
Okay.
it a bit of breathing room below the low.
Mhm.
Cool. Thoughts. I feel like position was valid. However, my entry was wrong. Should have waited for, and then you just cut off there. Should have waited for price to show more market structure than entering. Update pending. Cool. Not a whole lot to work from in terms of this little journal right here, but yeah, I can't really give you too much feedback because I can't, number one, see the
Yeah.
timing. Again, this is very, very important for your trading journal. You want to know what time you took a position at because that's one of the major variables in terms of whether a position will go in your direction or not, is what time you took this at. For example, if this was like prime New York session, fair enough, it makes sense to be taking that sort of trade. But then if you
Mhm.
took it in like Asia or you took it in London or
Yeah.
really late on in New York, then it sort of changes the dynamic of the position. And
Understood.
yeah, that's why you want to be keeping your timings down here. But yeah, we'll get into that. Cool. First trade, a little bit dodgy, but we'll continue.
Definitely dodgy.
A little bit dodgy. All right. I'm assuming it's the update of the previous position. It looks
Yeah.
like it. Update of previous trade. My analysis was correct. However, my entry was wrong. Should have waited for price to show me the direction I wanted to go in rather than predicting. So yeah, nice little bit of self-feedback right here. And it seems like you are aware that you entered a little bit early and you could have
Mm.
potentially waited. Again, I can't necessarily validate or invalidate that because I can't see the timing. So maybe you took this pre-New York session, in which
Yeah.
case 100% you took it too early. And then maybe this right here was the New York Open. So that would make more sense to take your entry on this candle on the break of
Mhm.
these three highs right here. That would
Yeah.
have made it a bit more sense. But again, coming back to
Yeah.
the time, I can't necessarily see that.
Yeah. I
Have you?
can't really remember, to be honest with you. I think it was like nearly a month ago that I took these trades.
Yeah,
So,
fair enough. Fair enough. Again, that's why we got a journal. All
mm.
right, another position right here. First thing I'm immediately noticing is you just got mad lines in your chart for no reason. You got a box up here, you got a box here, you got a box down here, you
Yeah.
got a line, I guess, showing the trend, and you just identified
No,
down.
that was painted on afterwards.
Say again.
That was like put on afterwards, like a
On
part of
afterwards.
my journaling.
I see. I kind of get what you're doing here, but again, it's a bit unnecessary. But
Yeah.
in all fairness, I haven't shown you the proper way to journal, so it's like it's fair enough in it. But we're going to get into that from this lesson onwards. You're going to have a proper set journal, and it's going to be way cleaner. It's going to be way easier to read. And when we come and do
Mhm.
these follow-up sessions, it's just going to make a lot more sense for you. So that is
Okay.
calm. Close position early because I saw a pullback and I'm a pussy. Closed at $650. TP would have been around $900. So cool. Let me just try to break down what I can see right here. Price is obviously shorting. You have like 3 key levels. I can't really see what level you're trading, but price taps in.
Mhm.
Let's just use your main key level here in the middle. Forms a little bit of an upward channel, I guess. So bullish market structure. You get a little bit of depletion right here, and a 5-minute change of character back to the upside. You then wait for it to break the swing high of the move, which would be right here. And then it gives you a little 5-minute market structure shift. You entered this scenario, you have a nice wide stop loss. You put your SL below structure, below the key level, nice bit of breathing room. And then you obviously had some sort of key level in mind, some sort of target. You said you closed out early because you're a pussy. Why do you shut out early right here?
Just simply because I saw a pullback phase and it looked as if, yeah, just simply I saw a pullback phase and it's just kind of like shat bricks. I think this was like my first trade on 50K.
Yeah.
So I don't know. I just wanted it to be a win, which isn't really a valid position, a valid reason, but
Yeah,
yeah, that's the honest one.
for sure, for sure. I mean, it happens, especially your first trade on a live account, a little bit of psychology in the mix, like you're nervous, you want to secure a win. So I get the idea behind it. And not that I recommend it, but like securing profit is not, it's not the worst thing. You could be doing a lot worse. So like
Yeah.
making sure you take money at the market is completely calm. It just depends on the reasoning behind it. You said you saw a pullback. Where was the pullback? So did you shut it on this white candle or the first wick, or like when did you close it? Do you remember?
Um, I believe I believe the blue candle like what's it called, was pulling back and then it closed out and then I saw that white candle there and I guess I shat myself. So yeah.
All right, so I'm assuming right here. To be fair, again, not the worst thing because you have essentially 4 rejection candles in the same area, price failing to create a body like above previous bodies in it. So it's essentially giving you upside depletion right here,
Mm-hmm.
especially when it comes to US 30 and NASDAQ. Whenever you do get a couple of depletion candles, price can very quickly turn around. So you can have like 3 candles like this, and then it can just print a big ass bearish candle and come the whole way back down to your entry. So again, dependent on the timing of the position, which I can't see down here because you've cropped it out. But dependent on the timing, it might have been the correct decision to make. So yeah, again, a little bit uncertain here because again, I can't see all the information behind this position, but
Mm-hmm.
right, it seems all right. All right, next one, final trade that you have journaled, entered on a retest, got out $121 profit. Reason for getting out, push phase was weak and market closed in 20 minutes. So this to me indicates that you took it right towards the end in New York, like super, super late.
Yeah.
Um, this looks like GM 30 price action to me. I don't know, can you tell? You know what this is?
No, that'll make it sense if it was Young and 30 to be fair.
Yeah, it definitely seems like GM 30 price action to me. Even the way the candles are forming, I just recognize the behavior. Again, not a whole lot to go off of based off of this screenshot. I know I kind of repeat myself like 3, 4 times here, but I do really want to stress the importance of having a trade journal, because if you're not journaling your positions, number one, you're never learning from your mistakes. You're not making like progression based off of your previous results, which is like the whole concept of trial and error, moving your way forward. And then when you do look back on it, if you do look back on it, you're just not going to know what the fuck is happening. And that's the case right here. And there's not a whole lot to go off of. I could sit here and do a little like market structure breakdown, but without the key elements of the higher time frame, the intraday key level, and like stuff like this, the 5-minute market structure is sort of irrelevant. So even if the 5-minute market structure looked super clean and it made complete sense, but then your daily time frame was iffy and your key level was a little bit dodgy, then like it's sort of invalid to begin with. You know what I'm saying? So cool. I'm gonna just click off this one. Not really too much to analyze right here. You've only got 4 positions in your trade journal, so I'm gonna have to stick it on you, mate. You need to be journaling more. I assume throughout the past month you've taken more than 4 positions. I know you've taken more than 4 positions. Should be journaling.
No, yeah, I have.
Why have you not journaled?
I don't know. I must just be like allergic to it. It's not like really an excuse or anything. Like I don't know. I just take out complete accountability. Like I just simply haven't done it. My brain must have malfunctioned. But yeah, I mean, this call alone is like, well, I shouldn't have to have a reason for journaling. It should just be what I do, and I am going to implement it now. But this call alone, like for me, reflecting back on those trades, right? Like I can clearly see, like I'm such a different trader to like then. So for me to not have a point of reference of my progression, like even in this call, yeah, it's annoying looking back at it. So that's enough for me to definitely start journaling every single trade. And the journaling method that you're going to give me now, I will do it in every single trade. That's a promise to you and everybody in the audience. So yeah.
Yes, sir. Definitely, I need to get on that, because I can't like, you'd be surprised the amount of traders that I teach, the amount of people I speak to who have been moving in circles in their trading for literally years. They've been unable to break out their unprofitability cycle. And then I asked them, like, let me see your trading journal, let me see your data, and they can't whip up any sort of form or any sort of like picture. Like they just don't have actual data. They don't know what they've done the past 2 years of their trading career. And it's like, yeah, no shit, you're not able to move forward in your trading, because if you don't learn from your mistakes, if you don't recognize what you were doing wrong, you're bound to fall into the same trap. Analogy I used to use back in the day is like, if you put your hand over an open flame, you burn yourself. Like, what's to stop you coming back tomorrow and doing the same thing? Well, it's the memory that you burnt yourself yesterday and it hurt and you don't want to do that again. So like you take that with you to the next day and you don't burn your hand. But like if you had amnesia and you just forgot what happened yesterday, probably at some point be intrigued by the same flame, put your hand over it again, and you'd get burnt again. And that's what trading's like. And some people claim they've got sick memory, they can remember the trades or whatever, but I can guarantee you, when you look at charts as much as we do, and you look at price action as much as we do, and you're trading multiple instruments and you've taken hundreds of positions over the course of like a couple of months or a couple of years or whatever it is, you're going to forget. You're not going to remember. Like you're just not going to have a point of reference, and you're bound to just continuously move in these circles. And that's why journaling is super important. So you can look back at the end of the week, look back at the end of the month, be like, cool, these are the trades I've taken. This is why I took them. This went well. This didn't go well. I need to work on X, Y, and Z, and you can actually have a plan moving forward and actually make sure that you're not like moving in these circles. With that being said, let me show you the correct method of journaling. Now, this is something my old trading mentor taught me way back in the day. Shout out to Luca. Donnie was a bit of a Forex guru, but we'll move past that. It's one of the few valuable things he actually taught me, and it's the concept of the 5-step journaling method. It's a video journal method. It takes longer than traditional journaling, but in my opinion, it's way more beneficial for a couple of reasons. Now, just before I fully get into it and give you the 5-step process, let me just give you a bit of backstory and a little bit of the idea behind the concept. So this whole thing behind the 5-step journaling method is you're speaking your trading plan out loud. You have 5 steps that you're following that I'm about to give you, and you're essentially walking yourself through the process, and you're doing it in like a video journal. So like you're screen recording your trading view and your voice. It doesn't have to be your face, just your voice. And you're going through your thought process. So the higher time frame, this is what I saw, this is my key level, this is my entry, this is how confident I am about the trade. So you give your trade a rating based off of like a 1 to 10 confidence scale. And then what this does is, over a long enough time frame, when you gather enough data, you can look back at your positions and then you can kind of essentially decipher, cool, anytime I have a confidence rating of like 6 or below, the trades tend to go against me. The trades tend to not work in my favor. And then moving forward, you know, cool, if I have a 6 rating or below, maybe best for me to not take that trade. And it can start to implement some sort of grading system where you can decipher, okay, what trades are high probability? What trades do I feel good about? What trades do I not feel good about? Now, this really heavily links into the concept of the subconscious mind and actually being able to essentially track everything in your head, because we have like supercomputers in our head via the subconscious brain. You might not be able to consciously like be aware of it, but your brain is tracking a lot of the data that you're missing. And this is sort of a way to prime that repetition and actually get yourself in the, I call it the zone in it, like essentially trading in the zone. Shout out to Mark Douglas, but it's a very good book about it. Furthermore, I've said there's a bunch of times, but Blink by Malcolm Gladwell, it's an amazing book that I read a while ago. And it's the power of thinking without thinking, the power of the subconscious brain. And that concept links very heavily into this. So I recommend, if you guys have got some time to be doing some reading, which you should have some time, at least 10 pages a day, I recommend start reading that book and you'll get a very good idea of what I'm talking about right here. But cool, let me show you the 5-step method. Come right here to my chart.
Can see it.
And give you a little breakdown. Cool, let me just go to a fresh US 30. Cool. Five-step trading journal. Step 1, and I'm going to explain how you actually go through these steps in a minute. So make sure you watch to the end of the video before you just take these 5 steps and run with it, because there's a lot more that goes into it. So 5 steps. Step number 1 is your initial thoughts. I'll explain what that is in a minute, but initial thoughts. Step 2 is your higher time frame and your intraday key level. Step 3 is your entry, the SL, and your TP. So essentially your position. Step 4 is your confidence rating, which I can't spell apparently. Confidence rating / visualization, which we're going to get into as well. Very, very important. I also can't spell that. Apparently I'm just dyslexic. All right. Confidence rating, visualization. And then step 5, arguably one of the more important steps is your trade management. That seems like I spelled it right. All right. Nice. 1 for 3 on the spellings. Confidence around trade management. All right. Cool. So the 5-step plan. Now, it's super important that you do this before you take the position. So you have to go through this process before you take the position, or furthermore, as you're about to enter the trade. There's a couple of different ways you can go about it, but I'd always recommend doing it before you take the trade, just so like it's not interfering with your entry or whatever. Because if you start doing it as the trade's playing out, you're gonna start panicking, you're gonna rush stuff, and it's not gonna end up well. Equally, you can do it right after you take the trade, but don't leave it too long. Otherwise, your idea behind the trade is gonna change as price action moves. So you want to do it while you're still at like a fresh like blank slate or whatever. The only step that varies is step 1, the initial thoughts. This should be done the second you come onto your chart. Now, initial thoughts refers to what your initial bias is. Now, again, this links very heavily into the subconscious brain, that book I was talking about, Blink by Malcolm Gladwell. And it's the idea that once you've been trading for an extended period of time and you have some market experience and you have some knowledge of the market, you'll be able to immediately look at a chart and you'll have this sort of like intuition, this gut feeling, just something that will pop to mind. It'll be a buy or a sell. You'll be able to see it very clearly. This sort of links to what we were saying earlier about whenever price action is very clean and you come onto a chart, immediately you'll have a bias, buy or sell. The times where you don't have a bias is usually when price is a little bit iffy and it's probably not a great trading day. So what you want to do is you want to start to program your mind, start to program your brain to have an initial bias, to start to do your analysis very quickly the second you come onto a chart. And this is done through just constant repetition. So initially speaking, for your first couple of months, this initial thought section is not going to be massively beneficial to you because you're just going to be guessing based off of uptrend, downtrend, whatever. But once you've been trading the market for like a decent while, a year, 2 years, whatever, we start to have this catalog, this backlog of data in your subconscious brain. And when you come onto a chart, essentially your subconscious brain will be doing all this analysis, will be going through your entire essentially trading plan, and you'll have a very good bias, a very high probability direction for you to be trading in. And that's based off of your initial thought. So what I want you to start doing is when you first come onto a chart, get into a habit of, for example, let's say I just open up my chart right now, I'm going to GM30 on a daily time frame. The second I click on it, without even thinking, without trying to do any analysis, I'm just going to write down the first thing that comes to mind. So cool, initial thoughts, I'm thinking buy. That's it. And you just write that down, you make a little note of it, and then you make sure to include that in your trading plan. And then once again, once you have a lot of data built up, you'll be able to go back through your initial thoughts and see what your average probability is and what your average like success rate with that is. And over time, it will gradually build up and you'll have a good initial bias. And that's why right now, without me having to go into depth about my trading plan, without me having to sit there and do market structure and market sentiment and go through the candles individually, within like 0.5 seconds, I can tell you on a daily time frame what the bias is, just because I just have that repetition built up. And that's ultimately the point you want to get to with your trading, is when your entire trading plan is essentially subconscious and you're not really thinking about it too much. You're just trading the setups that you see. Make sense?
Understood.
Cool. So that is your initial thoughts. Cool. Your next step is your higher time frame and your intraday key level. So briefly, and again, this whole thing, this whole little video segment, you usually typically want to keep it under like a minute 30. You don't want to have it massively long. You can have it longer if you want, but just for your own sake, when you come back to review it, you want to keep it around a minute 30, 2 minutes max. But you just briefly touch on what the higher time frame bias was, not your initial thought, that's separate, but what the higher time frame analysis is that you've done, what your intraday key level was. Again, I'm going to give you an actual example and do a little trade breakdown for you in a minute so you can kind of grasp it a little bit better, but that's what that is. Entry, SL, and TP, pretty self-explanatory. Where's your entry at? Why is it there? Why have you entered here? Where's your SL at? Why is it there? Why is it, like, where is it protected from? And where's your TP at? Why are you targeting this area? So on and so forth. Step number 4, confidence rating. So you just simply give yourself a rating of 1 through 10. 10 being 100%, it's hitting TP, I'll bet my life on it. We're hitting target. 1 being, this is not hitting my TP, I'm probably going to get SL. I don't know why I'm in this trade. 5 is like 50-50. So you just rate it based off of that. But you want to keep your ratings consistent. So like don't 1 week be giving all your trades 10s and next week you're giving them all 3s. Like try to keep it relatively consistent. And again, you'll build up that catalog. Then you want to go into visualization. So equally with step 4, you want to sit there for a little second. And as you take the trade or just before or whenever you do this little journal, you want to sit there and visualize what are the next 3 candles are going to form. What do I see in my mind? It's like even sit there, close your eyes, do a little like meditation if you need to. but what candles do I see forming? What do I want to see from price action? If you're entering a breakout move, you're probably anticipating 3 big impulsive candles, small wicks, large bodies, and essentially describe the candles that you want to see. And again, the importance behind this is through time, through like practice, through repetition, you're going to get to a point where you can very clearly see the moves before they happen, and you can sort of anticipate the price action as it's forming, and you just get better at doing that. And then last but not least, trade management. How are you going to manage your trade? This is a very important aspect. A lot of people miss it because once you're in a trade, your emotions change, your psychology shifts, everything kind of goes out the window. So you want to have a game plan of how you're going to manage your trade before you get into the trade. So let's say I'm in a trade. I anticipate it's going to take like 2 hours to play out the full TP. I say, cool, my trade management, I'm only going to check it once price hits this key level, or I'm only going to take partial profits once price does this, or I'm only going to move my stop loss to break even once X, Y, and Z happens. And you give yourself a plan to follow, because if you don't have that plan, what you're going to do, and you actually showed me this in one of your previous trade examples, is you're going to panic, you're going to exit trades early, you're just going to do a bunch of stuff based off of emotion because you don't have an idea of how you're going to manage the trade. Cool. Now let me give you this example right here in an actual trade and an actual bit of price action. Now, obviously, I don't have a trade right here, but I'll just whip out any random position. I'll just find a little trade right here and we'll go through it. Again, this is not necessarily a valid position, but I'm just going to go ahead and use it just for the example. Cool. So let me just give myself a little key level right here. It's a bit of a dodgy level, but again, just a little example just for the video's sake. Furthermore, this actually looks decent as well. Chart's bugging out a little bit. Cool. So what you would do is, let's say I'm about to enter a trade, done my analysis. At this point in time, you should already have your initial bias down somewhere here, or you should have it written down. Let's say my initial bias from when I first checked it was a buy. Furthermore, even if it's in the opposite direction, let's say like my initial bias was a short, that doesn't mean I have to short, but I'm just making a note of it just so I'm aware of what my thought process was when I first saw the chart. What you do is you come up here to publish, you click record video idea, click continue publishing, and it'll ask you to select the screen. I'm obviously not going to select it now because it'll bug out the recording. But it will give you a little 3-second countdown, and then it will start recording your screen and your audio. Now, let me just give myself a 3-second countdown, and I'll walk through the process like I would if I was doing my own like video journal. Cool. So 3, 2, 1. This is US30 on a daily time frame. My initial thought was a buy. My higher time frame is bullish. Market structure and market sentiment are in line with each other to the upside. I then scaled down to my intraday time frame, and I found a key level based off of the accumulation high. So point here, point here, point here, and I drew my level across. I then scaled down further to a 15-minute, and I've identified my entry. My entry is based off of this 5-minute depletion, price failing to break the previous low, and a change of character back to the upside. I'm taking my entry now based off of this bullish impulsive candle. My stop loss is below structure, and I'm targeting a 1 to 2 continuation. Cool. So sorry, my team's bugging out on my screen. I'm gonna have to come back out. So I'm just gonna move this. I'm targeting a 1 to 2 continuation. So you've been through your entry, your SL, your TP. Now my confidence rating on this trade is about 7.5. I'm pretty confident the price is going to go in my direction. I visualized the next 3 candles being a strong bullish impulsive move. I think the candles are going to be high volume, very small wicks, no retracement candles. And I plan to manage this trade at least when price tags 38360. I'm going to move my stop loss to break even, or potentially take partials based off of the behavior. I'm not going to touch this trade until at least 12 o'clock, for example. That's the end of the recording. Quick minute 30, you're done and dusted. And then later, once price plays out, or once price moves, you can do a little update journal. So you can literally go through the exact same 5 steps. You do another initial thought. So cool, at this point, my initial thought is still bullish. My higher time frame is still valid. The key level is still there. The 5-minute behavior has given me X, Y, and Z. I've now managed my trade. My stop loss is at break even because it shouldn't retrace, etc., etc. And you just go through the same steps again. Now, key element right here, and let me just stop sharing my screen briefly. Key element right here is you want to keep your wording very similar. So on a trade by trade basis, you want to have your thought process be virtually identical. So for example, if you want to word it, like let's say you're going through the 5-step process and you come in, you're like, okay, initial thoughts, I'm thinking bullish. Don't then come in on the next trade and be like, price today looks like it's going up, or price action is looking long. Like try to keep your wording identical. And again, it's just going to help your subconscious brain build that repetition and like really build that neural pathway in your brain where you just don't have to think. And eventually the end goal is, once you've rinsed this out a bunch of times on hella trades, you'll get to a point where anytime you look at price action, anytime you open up a chart, anytime you look at any sort of entry, naturally your brain's going to go through the exact same 5-step process. It's going to happen like lightning quick, and you're just going to be able to see it on the chart. And that's when your trading will get to that like subconscious level where you ideally want it to be at. Make sense?
Understood. Thank you very much.
Have you got any questions on that?
I think you covered everything perfectly, to be honest with you. I mean, I can always come back and watch this, but yeah, like I said, starting from now, I will do that exact process. You know, it's not exactly time consuming. I haven't really got any excuse not to do it. And yeah.
That's it, bro. I'm just going to take a sip of my water and then I'll explain a little bit more. We'll wrap up the session.
That's good.
Again, it's super important that you do this like consistently, because I've shown this method to a bunch of people, and I honestly do think this is super beneficial. It really helped me out on my trading personally, but it only works if you do it consistently. It does take some effort, it does take some time. Again, it's not like the most amount of effort in the world, but a lot of people, once they've taken a trade, they don't give a shit anymore. That's it. Like the trade's done, whatever, I'll go on to the next one, and they just disregard it. But it's actually super important. And if you do this consistently, it will genuinely help out your trading over a long term. But you have to do it consistently.
100%. And what you said as well makes really much a lot of sense. Is like consistently, but also doing it consistently the same. Because then if you're doing it consistently the same, like you said, when you approach the markets, then you already have that thought process that initiates. So it makes perfect sense. 100%.
100%. But yeah, I don't know how long this video is, but it feels like it's dragging out a little bit. So we're going to wrap it up right there, unless you got anything else to add.
No, not that I can think of. As always, thank you for the session, bro.
No problem.
Hope everyone's trading at home is going well.
Yes, sir. Yes, sir. Hope you guys are been profitable, or you're moving in the right direction, or at least making progress in your trading. Once again, if you made it to the end of the video, congratulations, because you do not have the attention span of a goldfish. So nice one for you. And masterclass end of April. Once again, limited spots. First link in the bio. It's 100% for free. We're going to be going through a lot more than we've covered here on these sessions. So if you've gotten some value from the sessions, if you learned some stuff from me, you definitely want to be in the masterclass, because we're going to be doing a lot more stuff going into that. And yeah, you don't want to miss it. It's going to be one of the only free masterclasses that I host. So yeah, just take advantage in it. Like you're not losing anything. Just a little bit of time spent investing in your learning and investing in your mindset and whatnot. Be covering a lot of stuff. So yeah, I'll see you guys then. Gonna wrap up the recording, and see you guys on episode 7.
Yeah.